Hello and welcome back. This is David from the Personal Finance Squad.
Hey, we just finished up with the beginning of Chapter 10 where we looked at Jasper's 3-year plan. This plan covered all of his savings vehicles. Savings itself for short term, miscellaneous for the unforeseen, the college fund, the rainy day fund, and the bonus checks. And putting all of that together, it proved out with hard work and discipline how much money can really be saved. So now what we want to do is assume further out in this 3-year plan in section 10.2 for increased disposable income. This means Jasper has gotten a raise. So when you get a raise, the question is, what do you do with that money? And that is up to you. Jasper has more than proven out that he has been able to save for his immediate and long term and pay his bills, and also at this point reduced his debt that is causing him interest. So he has done a magnificent job, and this is the kind of thing that you should be able to achieve at some point in your life. It can't be the right away depending on who you are, but it can be done with hard work and discipline. So getting back to the question of what do you do with increased money? Again, when you say it's up to you, it's based on your situation, but I can say if you are paying your bills and you are meeting your needs, then you should pay yourself first. We've been following that through the whole book. That's been a theory that we have been adhering to. Now, at the same token, I would say that when you make more money, you can never put enough money away for your future, so you should also pay yourself by giving yourself more money for your future. So you can do both. Now, at the same token, when you can afford more money because you make more money, that means you're going to want to have more things that you've earned. And so that's what we'll get into a little bit further into this chapter. So if we see here, Jasper at 3 years, that was the goal we've talked about. He's 28 years old, and he has definitely put himself on a great path. And he has received a $5,000 raise. Now, the only difference is that his medical dental vision plan is not fully covered. Through this whole entire book on video, we've assumed it's been paid for, and we will get into medical plans again as we go further into subsequent videos. But for now, we're going to say that Jasper is going to be charged $50 per pay period, which in reality, that is very, very cheap. Now, that $100 total or $50 a paycheck is pre-tax, so we like that. And we find that he will have a take-home pay of $2,216, which is an increase of $97 take-home per period. So now what we need to do is figure out the gross pay, even though I just gave you the number, so you can see it. Okay, so everything in here is the same as it has been before. We have the 401k, we have the FSA, we have the DCAP. Health insurance has been added right here, so that takes out $50, and the taxes, and so here's the final number. Okay, so now we need to look at the budget. Now, what can he do with this money in this budget? So, we look at our grid here, and we see that not only has Jasper increased his disposable income because he paid off his student loan and his credit card and furniture, he's opened up money. He has also paid off his emergency fund and opened up money. So, the combination is increasing his disposable income. Okay, so let's take a look at the chart. Now, the emergency fund was $460. So that, my friends, is a nice job. That's a great increase in disposable income. Now, you should note that if your expenses increase, which is going to happen here with increased disposable income, you should make sure that your emergency fund lines up with that as well, meaning you need to add a few more bucks to keep that up to have a 6-month stipend of cash. Now, we also see there's an increase in paychecks, which was $97 per paycheck, so that comes out to $194. And remember, we do this because we work on 2 checks a month, right? Per month, so we don't count the bonus checks in this analysis. So, student loan, furniture, credit card, all paid off. Very disciplined. That is opened up $415 collectively. We see that he removed his home phone. He decides to use a cell phone instead from here on out. So that's $45. The computer was also paid off, which wasn't being charged by interest. Cell phone reduced as well, and his cable bill. So we take all of that and we can see that there's $1,205 now in increased disposable income. And my friends, that is a lot of money considering the amount of money that he makes. Now, this is something you can achieve yourself one day based on your scenarios. So it's all relative to what you make, but this is a nice percentage. This is great. So it's important to know that this is the type of thing that you should do. It could be on a scratch piece of paper. We've been using Excel grids, which you'll see as we go through videos, or what you may be doing in class, or whatever you may have. But even getting out just a notebook and writing things down like this so that you can see the type of thing you'd like to get to or the goals you want to meet gives you a visual perspective that actually is a little mental boost to see what things can look like, what you would like to achieve. So with that being said, some things have changed in his numbers, and we can see now that the subtotal in his budget has increased to $4,764, and his expenses are reduced, giving him $1,205, as we just said here. So this is great. Now his medical, dental, vision, $100 a month is technically a decrease in income, and what we mean by that is because it's baked in. So it's hidden, if you will, in the paycheck. So we don't have like a calculation for it. Here we did it up there in the little grid we do. You know, check out the take-home pay depending on the scenario that we've been doing throughout the videos. So a new grid shows that there's $4,432 a month. Throw in the FSA decap, the same things we've been looking at, and we balance it out as we've been speaking. We now sit at $1,205. Okay, so what's the next move? I mentioned earlier that there will be an increase in expenses, and so we're going to get to that in the next set of videos. I do want to point out, though, as kind of a summation to all of this, that as the exercise to reduce debt and expenses reaches a milestone, the increase in disposable income provides an opportunity to pay for things, some by choice and some by circumstance. Those are things you just don't know. The point is that the budgets can be expanded to capture as much as you want. You get on a roll, you feel confident, but it is a huge undertaking to really understand everything you're spending. So I don't want to make this confusing. What I'm saying is we have tracked everything following Jasper, and you should be doing it at this point as you build out your budgets personally or as a student in class. This depends how far you want to go with it. So for example, we talk about coffee. We talk about you could be going to buy Jimmy John's every day. Whatever those little expenditures may be is really well proportioned if you take care of them in the leftovers. Again, you can have a separate spending tracker, which we talked about earlier in our videos, if you want to go to that extent. If you do not, then just use the leftovers as they are for free spending cash, because they're not tied to any expense. They're just tied to whatever you want to spend it on. In truth, most people aren't going to go to the level of using a spending tracker sheet, because it is another, really in a sense, another budget. So you have that, the supplemental, and the main budget sheet. And then you have to backtrack all of that, pair it up in your online bank account. So you need to do what works for you, and that's why budgets are flexible. Just make sure that if you have increased disposable income and you have more expenses, just make sure you track the major things and just keep all of those other ones in the spending amount or the leftovers here, and you should be able to manage just fine. So you can see that right down in here we already have our next topic in 10.4, which is adding term life insurance to the budget. And there'll be a few others that we go through in subsequent videos as Jasper is going to decide to add more expenses to his budget. Thank you for being here with this video, and we will see you on the next one.